Thank you, Danielle. Appreciate the introduction, the warm introduction. Thank you for that, and thank you to Kerry and the rest of the Gold Conference and everybody for sort of showing up. Very, very good of you, and thank you for the invitation and the opportunity to have a bit of a go here today. My pleasure to be here, and if you stick around for long enough, we're going to buy a drink a bit later on, Danielle, down in the, well, I think probably in here and just outside. So look forward to buying everybody a drink a bit later. Okay, so just a few overheads, a little disclaimer there, and just really to point out to you what I was just going to bang on about for maybe 15 or 20 minutes, Danielle, if it's okay, and then if there's anybody left in the room and the slightest bit interested, then happy to sort of have a go at a couple of questions if you like. So just a few things, talking about what we see the future as in terms of commodity demand going forward, whether it's gold or other metals. EMR Capital you mentioned, and just a little bit of a advertisement for EMR Capital and the private equity side. Talk a bit about copper. Copper, after all, is red gold, so, you know, it gets a run here at the Gold Conference. Gold, of course, and you don't need me to talk about that very much because you've got plenty of experts here. And the advantage that we have here in Australia, again, some of the criteria that we look at in EMR Capital when we're evaluating opportunities, whether they be early stage, late stage, whatever stage opportunities, acquisitional, bolt-on type opportunities, so the sort of work that we go through, and a couple of case studies, 29 Metals and then Ravenswood Gold at the very end. We'll save the best to the end in terms of gold. Okay, so that's what we wanted to have a bit of a go at. Look, where are we in the so-called super cycle and all of this sort of stuff, and we've been talking about it for some time. As far as we are concerned, we are in for multiple decades of good, strong metals and commodity growth going forward. We've been talking about it now for a very long time. We've been right pretty much most of that time in terms of good, strong growth, led by China, followed by India and Indonesia, rest of Southeast Asia, and the rest of the developing world, in fact, all chipping in. And so you're going to see more and more of it as time goes by. Humps and bumps along the way here, and you've seen a bit of a hump and a bump going on here around about the sort of COVID area that we had the GFC, and we survived the GFC only just. And then going back, of course, to the Asian financial crisis at the turn of the century, and prior to that, of course, late 80s or thereabouts, another bump. So you get these sort of bumps along the way, but as far as we're concerned, the direction, the force are perfectly clear in terms of going forward. And in fact, I have to tell you that in my experience here, which is fairly long, as Daniela, who was here a second ago, was just saying, goes back 40 or 50 years in the industry. I think we're poised for, you know, the best is still on the way here. Okay, so just when you thought it was safe to come out of the kitchen in terms of the multi-decade demand growth, you've now got the whole energy transition, net zero, decarbonisation, renewables, EV, the whole, however you want to characterise it. It is going to add another layer to metals and mining and commodities demand. And it's no longer a so-called thematic. It is indeed a dynamic, and you've got countries and so on all committing to net zero by such and such a time, and so on, and China out to 2060 and India out to 2070. So we've got 50 years of it coming at us here in terms of this energy transition. And is a transition, by the way. It's a distance race, it's not a sprint, and people are starting to realise and appreciate that. So it doesn't mean you won't have humps and bumps along the way here, but again, direction, force, perfectly clear. You've got another layer of strong demand. And a couple of wow charts here in terms of increases in capital expenditure, and then population growth, which is driving it, of course, GDP growth on top of that, and then the energy metals demand, another layer on top of that. As I say, there'll be humps and bumps along the way here, but direction and force perfectly clear. Okay, so that is the macro environment that we're looking at. We believe you've got to be ready for the humps and the bumps, but that's the macro environment in terms of good, strong demand coming at us. What are we doing about it, EMR Capital? Well, we're mining industry people, we're private equity with a soul, as I say to people, so really a mining investment house and group. We say 4 core competitive advantages here: long, strong, deep operational experience and background. So people have been in the industry pretty much all of their lives at the coalface, so as to speak. And living proof here today, got Brett Fletcher, John Chomley, a number of other EMR Capital people here who've had that long, strong, deep experience. So we like to hands-on, we like to sort of be in a control or joint control position, because if you go to a lot of trouble to put all that expertise together, you want to make sure you're actually using it optimally, if you like. Good linkages back into Asia, and again, we've been doing that all of our lives. Good track record in terms of working together particularly. We didn't just get together at the pub last week and decide to start a private equity group. We've been doing it now, working together for 15 to 20 years type of thing. And we focus on just a few core commodities to keep it simple for ourselves in particular. And as Danielle said, a number of the number of investments and funds under management there along the bottom. Okay, so what are those favourite commodities? Copper, for all the reasons you know about, and there isn't almost an hour goes by that your inbox doesn't get filled up with somebody talking about another wow factor, another increase in demand for copper going on, and challenges to supply. And we include in that, by the way, the energy transition metals, so it's copper, nickel, cobalt in that area, but dominated, zinc gets a run in there too, but dominated by copper. Gold, for all the obvious reasons, for all the reasons that we're all here, right? It's a wonderful, wonderful metal. It's the perfect metal, multiple demand forces on it, and serious challenges to supply. Met coal for not dissimilar reasons, in the sense in the bulk commodities here. Met coal because you won't be having any energy transition and you won't be having long-term economic growth anywhere if you don't have steel, and you won't have any steel if you don't have met coal. There are no substitutes, and they're not about to come by any second now, so you're going to need a good strong diet of met coal. So we want to be as long as we can there. And potash for similar dynamics, good, strong demand out over a long period of time, increased population and diets and people living longer and eating more, and I'm living proof of all of that type of thing. So, good, strong demand fundamentals and challenges to supply there. So they're the commodities. That's why, and they're the reasons we're in them. Okay, so what about the metals intensity side there? What are the winners? What are the losers here in terms of all of those metals that are in our total playbook that people here are very familiar with? Well, the good news, of course, is that all of these metals are winners. So if you've got the energy transition, all the things going on across the top side there, and all the metals coming down the left-hand side, then everybody gets a run here. So we're going to need all of those things. Clearly, copper is involved in just about everything. Nickel gets a very good run, not only because of the whole EV side, but also stainless, which is going to be used, and more of it. And chrome and various others there. Zinc gets a very good run there. Cobalt gets a very good run. And also lead, would you believe? Now, lead is in fact a battery metal. Lead has been used as a battery metal going back a very long time, and Brett Fletcher will remember this, going back into the almost 40 or 50 years ago in Rio Tinto. We believe that the Australian Lead Development Association, you might remember ALDA and ASDA, we actually produced the first battery operated motor car, and it was entirely lead batteries, and we had it in the ground floor of 95 Collins Street about 40 or 50 years ago. So our forefathers there, our forerunners, Brett Morris Morby and Frank Espy and some of those people knew exactly what they were doing. They were ahead of their time, and here was the battery-powered car in the bottom of 95 Collins Street. You needed 5 or 6 draft horses and 10 men to pull it anywhere. It was a pretty heavy sort of unit, but those people were ahead of their time at that time. Okay, so another wow chart or two on the right-hand side here with copper, nickel, cobalt, but lots of it coming at us. So if we're going to do the energy transition, which we are, and it's going to, as I say, it's going to be a distance race as opposed to a sprint type of thing. You're going to need all of those things on the left-hand side, and the ones that are actually out of the blocks nice and early are lithium, of course, nickel, and cobalt. And we are long, and we'd like to be much, much, much longer in all of those things. Okay, so going ahead for gold now, of course, and gold is definitely an energy transition metal. We're not going to have an energy transition that doesn't have a good, strong demand background for gold. All of that macroeconomic activity, all of the geopolitical uncertainty, and you're seeing it in spades right at the moment. I mean, there is some macroeconomic uncertainty out there as well, so it's not as if it's a complete cakewalk going ahead. You've got multiple moving parts, and under those circumstances, conditions are very good for gold. And of course, the whole geopolitics continues to be a nightmare. Peace, happiness, prosperity haven't sort of broken out around the world just yet, and therefore there's going to be good, strong demand for gold. Also, as the ETFs continue to buy. Countries are continuing to buy. Nobody's actually selling gold into this particular market. And as Barry Dawes will tell you, it is very much underpriced at the moment, and it's about to reach its tipping point and break out very severely in our view. On the supply side, and again, you've seen plenty of these sort of charts in terms of exploration spend, discovery rate, all going in the wrong direction here, particularly when demand's going in the other direction. So that only leads to one thing: it puts supply under pressure, puts the price under tension, and you'll continue to see rising or buoyant conditions for the gold price. And what will happen? Of course, it has to happen, and that is the bigger companies will be gobbling up the smaller companies because they just can't get access to discoveries, and so they will be making acquisitions. So you're already seeing this activity start to increase now. Yes, you'll have your humps and bumps. Yes, you'll have the downturns in the market and so on, but the bigger guys will see it simply as an opportunity to buy. So that's what they will be doing, and they're doing it as we speak effectively. Okay, so that's the gold side. Where do we sit in Australia? And again, on the gold space, we are best in class, best in world, best in show in pretty much all of these things. I mean, the Canadians give us a bit of a run every now and again, but from the perspective of prospectivity, it's fabulous here in Australia. From the perspective of reliability, jurisdiction, I don't need to bang on too much about this. Everybody knows that. From the perspective of all of the technical and technological capability and the technological, effectively, revolution that's actually been occurring here in this business is just fantastic, and there's more of it to come. And you've now got critical mass, so we're no longer just simply the operating side. You've got the whole of the METs, the mining equipment, technical services. We're now exporting, it's a very big export earner. We're exporting that capability, and companies here based in Australia looking to grow internationally. So you've got critical mass. It's very serious competitive advantage for our country, and we need to take advantage of it, by the way, and continue. And we don't waste an opportunity when talking, whether it's the bureaucrats or the politicians or the school teachers and others, to let them know that we need more and more capability here to be able to populate our mines and exploration companies and so on. So terrific advantage from that perspective. Okay, I mentioned a bit earlier, coming back to EMR Capital, jumping around a little bit here in terms of what our investment criteria is and are, and they're not dissimilar to everybody else's investment criteria in a way, but we try to go about our work in a very rigorous and vigorous and comprehensive sort of way here. So particularly for those exploration companies or developers, these are the sort of things that we look for. We look for scale, we look for quality, obviously. We look for a conventional process. You don't want too many moving parts in here, must be low cost, must be long life, must have lots of upside, or must have the potential to actually get there. It doesn't have to start with that, but we believe it's got to have that sort of improvement opportunity. Stable jurisdiction goes without saying. And then, of course, you want to have an asset that somebody else wants to own more than you. So therefore, it makes it that what we describe as eminently exitable. So they're the criteria we use when we look at things. A couple of case studies that we've put together here, Danielle, over the last few years, I suppose. One is 29 Metals, and 29 Metals consists of two assets from one of our funds, Fund 1, and one asset from Fund 2. That's Capricorn Copper in Queensland. We've got Red Hill in Chile. We've got Golden Grove in Western Australia. Some of these names are very familiar to people. We've done a certain amount of work. We wanted to bring it to market, to access the capital, access value, and take it forward. Put together a terrific team of people there. Peter Albert, the CEO, Ed Cooney, you will know some of these names. Michael Slafersky there from Credit Suisse. He was the CEO of their research there. Cliff Tuck from Newcrest. So a very good management team based in Melbourne. Excellent board, apart from the lame duck chairman here, but very good. Fiona Robertson from Sydney on the board of Whitehaven and one or two other companies. Bellevue, I think. Jackie McGill from South Australia used to run Olympic Dam several years ago, very experienced, particularly on the copper side, and Martin Alcaturi from Macquarie and Aquila and Deloitte's going a long way back. So very experienced, small board, but very experienced people. And we still own EMR still own 45% of that company, so which is a great advantage actually to the company in terms of going forward. Lots of growth opportunities here, many things that we'd identified that we didn't have the capital to take it forward to the next stage. That's exactly what 29M is doing now. They've got terrific growth potential, and they're going to take the volumes up 50% over the next 3 or 4 years, at least 50%, as well as unleash the rotary lie detector there up at Capricorn particularly, and also over at Golden Grove. So they're in very good shape to go forward. As I say, a few humps and bumps along the way, but it's got terrific potential, and people should, if you've got any money left after you've invested in all these terrific gold explorers here, then you should be buying with your ears pinned back 29 Metals. And the other one is a second case study here, Ravenswood Gold, and I mentioned Brett Fletcher a bit earlier. Brett is the CEO of Ravenswood, and Andrew Price is the CFO, and they're both here, and other members of the EMR team, and they'll be buying you all the drink a little bit later on. Okay, so Ravenswood, it's a JV or a jointly owned company between ourselves, EMR Capital, and Gear out of Singapore, Cinemas Group out of Indonesia, actually, their ultimate ownership, 50-50. We bought the whole of the Ravenswood operation and land package from Resolute, who were focused pretty much entirely and still are on their West African operations and projects and so on. So we bought it from Resolute, and we spent several $100 million over there, up there, Brett, just south of Townsville, in expanding the mining operation to include Bucks Reef and Nolan's open pits. So quite a big open pit area, and with a very, very long life, and particularly expand the processing plant up to some serious grunt going into the comminution circuit there, the crushing, grinding and leaching circuit, to get that operation up to become Queensland's largest gold mine at north of 200,000 ounces per annum. And Brett assures us that he's going to be at that sort of rate by the end of this year. In other words, get that ramp up to north of 200,000 ounces per annum. And then you'll be able to look at, well, further volumes, but you'll be able to look at many of the of our own exploration potential in and around the existing ore bodies, but also add in others that are actually in the region. So it's become, it's a good part of the world to be. It's actually from a logistics and transport, etc., and people perspective, but highly prospective there, and it's never really had as many people here say going over old ground. Well, you know, that's the way further discoveries are made, and upside potential actually comes at you. Things that other people have looked at and haven't had the opportunity to take forward. This field we're going to give a serious red-hot go in terms of not only getting it up, getting the volumes way up, but looking at the upside potential. And just one quick slide on that. Here's where we are here at Ravenswood. You've got Townsville up here somewhere, and you've got Charters Towers over here. Excuse me. These are all of our tenements and lots of upside. So, and Brett's working his way through all this. The focus, as you would expect, the focus is entirely on getting it up to the 200,000 ounce mark per annum and beyond that, and then we can start to look at some of those things in the region. So that's Ravenswood, and please meet up with Brett and co a little bit later on. So Danielle, that's really all I wanted to say. I've just really wanted to bang on about the above trend demand growth, which we're seeing. Gold, forever popular, love gold, it is the absolute perfect metal. We need to do more on the supply side. We're all supply side people here, by the way. We have a little bit of demand for gold and various other things, but we are supply side people, and we need to do more. And Australia is perfectly poised to be able to do that. We've got to take advantage of it. And you need to be selective. You've got to have a focus, be selective, be rigorous in your approach to things, but above all, be entrepreneurial about it. Danielle, that's it. Thank you very much. Go the Mighty Bombers.
Fantastic. Thank you so much, Owen. What a presentation, and you covered a lot of territory. So we've got a few minutes, and I'd love to throw it open to the floor if there's a question. Yes, the lady down here.
Sir, I just didn't understand where you said was the joint venture with the Ravenswood Gold.
So where is the joint venture with the Ravenswood Gold? Is that your question? Who's the joint venture with Ravenswood?
Yes, we are 50%. We are 50% partner EMR Capital, and the other 50% partner is an Indonesian company, Indonesian family group called Sinar Mas, who control a Singapore-listed company called GEAR, G-E-A-R, Golden, or might be Global Energy and Resources Company, and they're a Singapore-listed group. Very big market cap, because they also are not only 50% of the Ravenswood gold mine, but they also own a big percentage of Stanmore. And Stanmore Coal, I think it is, also in Queensland, they have their own mine there, but Stanmore have just taken over the BHP BMC assets for no less than 1.5 billion. So that closed, I think, around about last month. So quite a big, successful group, and particularly keen on investing in Australia. And so we're working with them here at Ravenswood, and we're looking at various other opportunities with them. By the way, the point, and a good point there about Indo, the surplus that has been created and grown there in Indo over the past several years is just mind-boggling, particularly with thermal coal at $300 or $400 a tonne type of thing. So they are major exporters, surplus growing, so they're looking to invest. And our last three transactions actually have been with Indonesia. We sold the Matabi gold mine to the Palmer Group going back a few years. Then we bought the Kestrel met coal mine from Rio Tinto. That was with the Adaro group out of Indo. and of course Ravenswood with the Cinemas Group. So, you know, they're lovely people. We've been dealing up there for years and years and years, and they've got good surpluses, and they're looking to invest not only in Indo, of course, but here in Australia and other places too. We're looking at other joint ventures with them outside Australia.
I can attest. I broke to Indonesia with Bearing Securities, and the Cinemas Group is a very, very large family group down in Indonesia. They're one of the largest. Anyway.
And the other thing I should say about Ravo is we've had a lot of investment bankers darkening our doorstep from time to time, suggesting IPO to us. So look out, save up for that if it comes.
Lovely. We've got a few more minutes for anyone that... Yeah, the gentleman just here.
The crypto crew tell all us gold dinosaurs to enjoy staying poor. I think we've run out of bandwagons, Owen. Do you think that a slight increase in the participation rate in gold could see a 1978, 1980 style bull market? And were you there?
Basically asking if we're going to have another bull market in gold that we saw in 1978 through 1980.
Yeah.
And basically maybe the crypto bulls have been a little bit too optimistic about the demise of gold.
Absolutely. Well, the crypto bulls are in the descendancy at the moment and likely to, well, IMO, likely to sort of remain in that area. So they've had a bit of a go, but that's the beautiful thing about gold. It has no substitutes. It is the perfect metal. You know, people have been trying to facsimile it and substitute it and copy it, but it simply cannot be done. So it's a wonderful thing. I do remember, is it going to break out? Ask Barry Dawes. Barry will tell you that it's definitely going to break out. It's definitely undercooked at the moment. There isn't enough of it about. We can't find enough. That's a good thing about it. It's actually very, very hard to find. And I do remember going back years and years and years and years ago, doing the sums for. I was the spreadsheet jockey for Bougainville Copper in the early days, doing the sums on what the NPV of this and that. And of course, copper we saw was going to be 30 cents, 35 cents, 40 cents, 45 cents. Oh, I'd never get to 45 cents a pound in those days. And gold was fixed. Gold was transfixed. $35 an ounce. That is it. $35 an ounce, Bretton Woods. So that just went in as a given. Then, of course, the whole Bretton Woods thing collapsed and gold took off. Took off to what, $800 or $900 or something or other. So it's at that inflection point again.
There we go. I would love to say I can take another question, but time is quickly passing, so I think we might wrap it up. And let's give Owen a big round of applause. Thank you so much. It's always, I think, wonderful to see such enthusiasm. Fantastic. Right, so let's move on to our second speaker. So now